So in general, you hear people are less enthusiastic these days about investing in China. And even in the area of climate investment, there's some question about that. ESG is very political. EVs are not as popular. But what about investing in climate in China?
Right. So you're absolutely right, David. Investing in China, you put it very nicely, but I think a lot of people are taking out their money from China. We've seen now from FDI going down to equity flows going out to companies repatriating their profits in China. And a lot of people are actually not even making overt noises that there are because they want to build the next factory somewhere else before they say they're taking it out. So I think, if anything, what we've seen is the beginning of a process of reducing outside money going into China. And of course, the biggest problems, we've talked about this before, is the demographics, the big loans that the banks have, and also the fact that people are still saving so much and not consuming. And that has not changed. Even yesterday's numbers showed there's deflation in the consumer area. So coming to the whole area of green energy, interestingly, while a lot of countries in the West talked about it, the Chinese actually became more than 80% of solar power production. When people talked about EV, they're now 50% of EV exports into the world, apart from also buying EVs in China. So there is this contradiction in the broader economy in China. And I think while we are still discussing whether there is, ESG or whether we should have renewable energy or not, they're not really looking at ESG. They're just looking at economics. They're looking at the fact that these EVs and solar energy is cheaper. They have huge reliance themselves on imported oil and coal. So from their own point in terms of geopolitically, they have made a bet. Plus, when they went to all the COP meetings, they heard loud and clear that the West is talking about this. The interesting thing is they did more than the West in terms of investments in this area.
So, Afsaneh, on this program, before you've said it's the second largest economy in the world. You can't talk about just ignoring China.
Yes.
You have to deal with China. So if you're going to have to deal with China as an investor, some of the issues you identify are directly or indirectly tied to the government. Even consumer purchasing, in part, is because of a loss of confidence, it appears. Certainly in the tech sector, because of what the Chinese government is doing. But given what you just said about climate, is that a relatively safer sector because the Chinese government is so committed to the area?
So Chinese government is committed. It's still continuing to invest a lot in this area. But at the same time, as Janet Yellen said in her piece yesterday, they're also subsidizing a lot the energy sector. So what they have done with new sectors, as China has entered any new sector, whether it was originally tech, whether it was infrastructure, whether it is now clean energy, huge subsidies going into it. So if you can find companies that are well run, that are profitable, I think it's a great area just because they are very good. But you have to be very careful to invest in companies that are really riding the low wage, the subsidized wage and subsidized loans from the government.
And given what's gone on with the stock market over there, do you want to look at private companies rather than publicly traded companies?
So I think maybe a few years ago, yes. But I think in private investments, the biggest issue is the rule of law and certainty of whether you can take your money out. If you invested today in a private investment, you would assume you're taking your money out maybe 10 years, maybe later. So I think what the environment that President Xi has created, unfortunately, makes people much less comfortable making private investments. If anything, Chinese very successful private investors and tech and venture investors are starting to invest much more in Chinese companies that are investing outside of China or in Japan, because they are concerned themselves that if they become too successful, the fate of Jack Ma and others may fall on them. But also, if they're not super successful, then what's the point? So the entrepreneurial spirit, which has been super important, really, in the last 20 years in China, particularly the last 10 years, I think that is waning. And it is, I think, something to really watch for any kind of investment in China.
Talk about more globally. We have COP28 coming up at the end of this month now. And there are discussions going on even as we speak. This week there were discussions between the US and China to try to come to terms on some basic issues, including funding for some of the lower income countries to be able to deal with it. If in fact, and it's a big if the United States and China could come to terms, if COP28 could come up with some meaningful global really agreements, would that be an investment opportunity potentially? Because it could really jumpstart a lot of the green economy.
I think it would be really, really helpful if there was agreement. And I think starting with next week's meetings, the APEC meetings here with a lot of Asian leaders in the US, that will be sort of the start of those conversations. And I think we should watch those to see what kind of agreements or lack of agreements there are next week in terms of climate, because that is military and climate are the two areas that people are looking for different kinds of agreements next week. So if that happens, I think we can be hopeful that when we get to COP, there'll be a more positive environment for some sort of agreement. My sense, though, is that the economics of renewable energy has changed a lot. So if you look at it, for example, on any given day in Texas versus California, one is ahead of the other in terms of solar production of power. So that is all based on economics, not politics, of ESG or all the other words that we hear. So if we're taking that line, if we're going to a lot of other countries, you're seeing that people want to move to EV cars just because they're cheaper at the moment in terms of running them. So if you look at that, it will be the consumers, it will be the private sector that I think will be bigger leaders in this. Public sector leaders have not really been, well, lots of speeches have been made, have been less helpful in terms of executing. And of course, sorry to go on this point, but the big issue in the US will be the IRA versus what happens in COP, really.
Well, IRA, I want to pick up on exactly that, because the theory of IRA was we'd have public investment that would trigger private investment. It would leverage. Go globally right now. It might make more economic sense to invest in green energy, but that's if you have the money to invest. There are a lot of countries around the world, the lower income countries, who just don't have the money. Everyone seems to agree that we need to get the money for them. There is a fund that's set up that, as I understand, has no money in it right now. Let's assume, again, a big if, that got funded. Would that create actually private investment opportunities, as a lot of these lower income countries have to rapidly invest in green?
Absolutely. I think these countries that you're talking about are growing faster. Some are poorer, some are less poor, like India and China, as we talked. So they will be the largest users of energy moving forward. They will be building a lot of power plants. So they have the choice to go coal, oil, gas, or renewable energy. And a lot of them are sitting in areas that are very sunny, if anything, are getting more sunny and more hot. So having solar energy for them is the cheapest. And their issue has been exactly as you said, the fact that there is no risk mitigation system to lend to them.